Okay, good morning, everyone. It's a great pleasure to welcome everybody to this morning's ESRI webinar. I should begin by saying I hope everybody is safe and well. I know people around the country are logging in, so the weather conditions are probably varying a little bit across the country, but we were saying just before we started the webinar, it's one of those occasions where it's actually nice to have Zoom. It would have been a bit of a struggle getting in and out of the ESRI this morning, so this is good. Anyway, so you're all very, very welcome to this morning's event. I'm Alan Barrett, the director of the ESRI, and our main task this morning is to launch 2 new reports from the Institute. And of course, this work is being done under our joint research partnership with the Shared Island Unit in the Department of the Taoiseach. So it's very, very nice to be welcoming colleagues from the SIU in particular. And it's great to have the opportunity to say what a pleasure and a privilege it has been for the Institute to work with the Shared Island Unit on these research projects and a number of others that will be coming along in the coming weeks and months. Of course, this webinar today is part of a series of events that the Shared Island Unit are running. They're essentially marking 1 year since they were launched by the Taoiseach Eoin Martin, so about a year ago. So we're again very, very pleased to be part of the events. So we've an extremely busy morning ahead. We've got presentations through reports. We've got some discussion of the reports. As ever, we'll try and make sure we have a little bit of time at the end for questions and answers, which I'll try and moderate. But the first speaker of the morning is the Tánaiste Leo Varadkar, and the Taoiseach has prepared some remarks for us. So we'll begin with the Taoiseach's remarks. So.
Hello, it's a pleasure to join you today at the launch of 2 reports looking at our trade and services on the island of Ireland and the factors that could enhance FDI performance across the 2 jurisdictions. These are the first outputs from the government's partnership with the ESRI as part of the Shared Island Research Programme led by the Department of the Taoiseach. 2 more ESRI reports will follow in January and February, examining performance in our respective health and education services on the island. This valuable research programme will continue through next year. We've commissioned this research to provide a high-quality evidence base for examining in real terms how we can do more and do better across both parts of the island, and also how we can align better. I believe we should seek to align upwards, taking the best of both jurisdictions, levelling up, you might say, rather than levelling at some sort of midpoint. But of course, we don't have to align in areas that we don't want to. It's okay to have differences between North and South, now and in the long term. The fact is, there are many dimensions of our economy and society where we don't always think all island. That's particularly so outside the border regions. As the new ESRI research bears out, the services economy and attracting foreign investment are 2 such areas. That means missed opportunities, both economically and also in how we encounter and understand each other. We should be prepared, collectively, to see our island in more holistic ways. In taking that shared island perspective as a starting point, the ESRI reports provide really instructive insights. Services trade on the island has been relatively under-examined as compared to trade in goods, and that's mainly due to data limitations. The research by Professor Martina Lawless builds a better profile of the all-island services economy than we've ever had before. Her work sets out the low proportion of services within overall trade on the island, that the Republic of Ireland is a considerably more significant market for Northern Ireland services than vice versa, and that we trade services in different and therefore complementary sectors, and the service firms are often selling into Britain before selling to the other part of the island. All of this indicates that there is considerable scope for the expansion of services trade on the island of Ireland. As the ESRI research confirms, service firms which trade across the border are systematically more productive and employ more people than non-exporting firms do. And exporting north or south is a great first step to selling further afield. Policy recommendations on how we can work to grow services trade are worthy of full consideration, not least on working for the coherence of regulatory frameworks in the post-Brexit era. The research led by Professor Siedschlag on FDI performance and strengths across the island, surveying a period of more than 15 years, is similarly thought-provoking. The report makes clear that North and South, we generally attract FDI in different sectors. It also shows that our respective economic strengths in attracting FDI are distinct in many respects. That means, of course, that we can afford to take a more complementary view of how we attract FDI, North and South, and that there is scope to think all island. This research also provides empirical evidence on the comparative advantages that the protocol provides for Northern Ireland. EU market potential is a key factor in location choice for high-value FDI, including manufacturing, which is going to be a sectoral strength for the North. Importantly, the ESRI work estimates that the benefits of what we could do in a coordinated way in the island to enhance the overall prospects for attracting high-value FDI and the skill jobs that go with that. The research team has found the most effective common step will be increasing all-island public investment in R&D in research and higher education. This is an area in which government has recently increased our footprint and where we are ready to do significantly more for mutual benefit in the island, drawing from the capital resources we've committed to our Shared Island Fund. In July, the government announced a new 40 million North-South research programme, resourced from the fund over the next 5 years. The programme will better harness the capacity of institutions and researchers right across the island to deepen our collective knowledge base. The first call is already underway, managed by the Higher Education Authority, and there has been a huge volume of applications, with institutions linking up across the island, ready to do more together. The government is also actively working with the Executive and with the UK government to develop new all-island research centres, led on our side by Science Foundation Ireland. Everyone agrees that the world-leading work that could be conducted on an all-island basis goes beyond what either jurisdiction could achieve on its own. And as this research verifies, the research, development and innovation base that these centres create will be a magnet for high-value FDI across the island. You can be assured that the Irish Government will continue our positive engagement with the Northern Ireland Executive and the UK Government on this really promising project. A striking aspect of the ESRI's reports is how much their conclusions on FDI and services coincide with what business owners and economic stakeholders across the island are saying to us. In June, I participated in a shared island dialogue on economic recovery with more than 140 business leaders and economic stakeholders from North and South. What came through very strongly from those discussions was the view that there is significant potential to expand all-island trade in goods and services through joint and coordinated policy actions by the government and executive. These include areas like enhancing border region clusters, supporting digital delivery of services, and focusing on high potential sectors for the island, including the bioeconomy, advanced manufacturing, and health sciences. Intertrade Ireland does a fantastic job in these areas on an all-island and cross-border basis, working alongside other enterprise promotion agencies. I think there's real scope to expand its work. The government also plans to build on the border and regional enterprise development funds to increase clustering, innovation, and collaboration on a cross-border basis. In October, as part of the revised National Development Plan, Project Ireland 2040, we set out our investment priorities in these and other areas, backed by a total all-island investment envelope of more than 3.5 billion over the course of the next decade. It sets out how we will work through all-island partnerships to create a more connected, sustainable and prosperous island for everyone. And the government's Shared Island Initiative is promoting this virtuous circle of evidence-based analysis, inclusive stakeholder engagement, and political focus on deepening all-island cooperation and investment. So I want to thank the ESRI and its skilled research teams for their partnership with the Shared Island Unit to produce work that explores the economic and social opportunities of increased cooperation on the island. Since the beginning of the pandemic, we've witnessed enduring social solidarity and the power of community on a scale that couldn't have been anticipated. For me, that reinforces the need and benefit of cooperation across every aspect of life. It's important that we grasp the opportunities before us working collectively north-south and east-west to grow our economy in new, sustainable and inclusive ways, to build a better Ireland together. Thank you very much.
Tánaiste, for those remarks, very wide-ranging as it turned out, and really sort of sets up our discussion, I think, very, very well for the rest of the morning. So as I said previously, we have a very busy morning, so I'm eager to move straight on to the presentation. So our format is we'll have the presentations of the two papers followed by the discussants, and the first paper is from my colleague Martina Lawless on the issue of cross-border trade. So Martina, I'm going to hand it straight over to you, and I guess you're going to share some slides.
Yes, thank you very much, Alan, and thanks to everybody involved in preparing today's event. Great pleasure to be here, and thanks, of course, to everybody in the Shared Island unit for all their input into this research over the last couple of months, and to everybody from a range of different departments and research agencies that helped me out with data on this. As you'll see throughout the presentation, one of the issues that has perhaps hampered a little bit our knowledge base in terms of cross-border services trade is that the data is a little bit kind of less detailed and a bit more patchy than the very detailed information that we have available on goods trade. So if I can, sorry, I'm trying to move slides. There we go. So services as a whole internationally is a very substantial and growing portion of international trade. And there is a bit of an international issue in terms of the level of data. So data available on goods trade, it's quite easy to track and follow individual kind of parcels, to know in a very detailed way what's exactly being moved across borders. That's a little bit more difficult to do in services. So when I say there's less detail available on cross-border trade and services on the island of Ireland, that's just not just an issue in terms of Irish data, but it is a bit of an issue in terms of international data. And one of the reasons for that is the different ways in which services can be delivered. So you need different ways of measuring when it's a customer moving across the border to avail of a service compared to when the service is maybe being delivered virtually over the internet or Zoom, whatever, across the border. So there's different modes of delivery in services trade, and that makes it a little bit more difficult to measure and to track in detail. What this report tries to do is really to examine all of the available data that we do have on the extent and the composition of cross-border services trade. And it does that by kind of compiling and comparing a number of different sources. So basically, there's no individual source of data that gives us all the information we would like to have on cross-border trade and services. So this report pulls together a range of different sources, both from official statistics and from surveys, to try and build as detailed a profile as we can on the extent of services trade, and also on some of the characteristics of the firms that are active and underlie that trade. And hopefully the aim is that this kind of stock take of the data available provides a baseline of what's going on at the moment in terms of potential areas for cross-border synergies, and that would help us kind of going forward in terms of identifying opportunities, and also it's a benchmark against which we can examine any risks that might come forward in terms of international trade and services requirements. So just to give a little bit of background on the international picture, international trade and services has been growing by about 5% per annum over the last decade or so, according to the World Trade Organization. And as I've already said, there's a number of data gaps that exist at an international level. And there's a lot of work going on in terms of international data agencies to try and get a little bit more granular, get a little bit more information in terms of how exactly we track services data. A lot of these difficulties are simply posed by the nature of services, that they're more intangible and therefore a bit less countable than goods flows, and that there are different ways in which these services can be supplied. That intangible nature and also the requirement for quite a number of services, even in this digital age, to still involve face-to-face interactions means it is a bit rarer, and this is found internationally, for services firms to export compared to goods firms. It's a bit more difficult to break into an international market, and there's greater barriers to entering, exporting in goods than in services. And that's one of the areas where, as you'll see, obviously all-island economy has some advantages given the proximity and the kind of links across the border, whereby this is a useful kind of stepping stone for firms, either for Irish firms exporting to Northern Ireland or vice versa, to enter the broader exporting market. And that's important in terms of policy initiatives, because there's a lot of evidence. This paper would present some, but it's kind of consistent with a lot of international research, that exporters tend to be larger, more productive, and pay higher wages than exporters. So incentivizing and supporting firms to become exporters is a useful policy initiative, because it has spillover effects beyond the benefits to the individual firm itself. In terms of then the all-island economy and the services component of that, if we look, before looking at cross-border trade, at services sectors within Ireland and Northern Ireland, we find that there's a larger share of services in total output in Ireland, and that overall it's more export orientated. So a greater share of services, the services sector is exported from Ireland compared to Northern Ireland. And of course, there's an important role in which multinationals and the large services sectors that multinationals are present in that accounts for that difference. And that links in nicely with some of Iulia's presentation that will follow this, when she talks about the importance of attracting high value FDI to the island as a whole and the synergies that are possible there. If we look at cross-border trade, we see that Ireland is one of the main export destinations for Northern Ireland firms, with a little bit less information available on Ireland to Northern Ireland trade activity, which I'll come to in a moment. And we also find that, as I said, firms build export coverage gradually, and that's where potential opportunities of cross-border trade as a stepping stone could have important kind of bigger picture implications in terms of introducing firms to exporting activity more broadly. So as I said, one of the issues with services trade is there's not as much detail in terms of data available. So what this research has done is try to pull together different pieces of data from a range of different sources. One of the most important data pieces from the Northern Ireland side is the data from the Northern Ireland's Statistics and Research Agency, and they do an annual survey of all firms involved in both manufacturing and services, in which they ask them about their sales, exports, external sales, and a range of other firm characteristics. So we've drawn on that quite heavily from the Northern Ireland side of things. For firms in Ireland exporting into Northern Ireland, the data is coming from a kind of a wider range of sources, from the Department of Finance's Credit Demand Survey, which includes Northern Ireland exports as one of its questions. And that's focused on SMEs, so it doesn't have the larger multinationals involved in that data. But we can supplement that with some surveys by the Department of Enterprise, Trade and Employment, which focuses a little bit more on larger export-orientated firms. And then some of the information in the report also draws on Intertrade Ireland's survey, where they have a quarterly all-island business monitor, which is one of the only sources that ask questions of firms on both sides of the border about their current business environment and how it's been impacted. And we draw on that for some of the impacts at the moment of how firms are coping with COVID-19 and with the challenges posed by Brexit. There's also an issue in terms of cross-border services trade, whereby you ask firms about it, they don't always necessarily even know that they're exporting because they're selling goods to tourists or to travelers. And technically, of course, that is an export for those firms. But we need to supplement the firm level surveys with some information from travel surveys. And both NISRA and the CSO examine kind of cross-border travel and shopping, which is a useful kind of supplement to the business sources. There is, although data from the Irish side, as I said, is somewhat limited at the moment. We are anticipating, it would be incomplete to not mention, that the Central Statistics Office are expanding their annual services inquiry to add Northern Ireland as an export destination. And that would be included in the next release of their reports on exporting businesses. But it wasn't yet available to be included in this report. So that the data is improving and expanding over time, but there are some recommendations in the report on where these data gaps could still be addressed. So if we turn to the information that is available on the extent of cross-border services trade, you see here the blue lines are goods and the orange lines are services. And of course, it's immediately striking that goods, cross-border trade in services is much, much lower in both directions compared to cross-border trade in goods. Both for goods and services, we see slightly higher flows coming from Northern Ireland to Ireland than vice versa. And that's consistent across both. And when we look at firms, we see that Ireland tends to be a larger destination market for Northern Ireland firms, with Irish firms firms in Ireland, including multinationals, tending to sell to a broader range of markets. And some of that, of course, is due to the relative sizes of the economies, and some due to the importance of multinationals in the services sector in Ireland. If we look at then how firms, the share of cross-border trade in total goods trade and total services trade, for Northern Ireland, we'll see that if you include Great Britain, about 15% of total imports by Northern Ireland firms come from Ireland. About 20% go from Northern Ireland to Ireland. If you exclude Great Britain, which are counted as external sales in this NISRA data set rather than exports, those percentages are up at about 35 to 40% of both imports and exports for Northern Ireland firms are being sourced in Ireland. And that's broadly true of both goods and services. So this is when we express it as it's 35% of the services trade comes to Ireland, 35% of the goods trade. Although, as we did see in the previous slide, the level of the services trade is a lot lower than that of goods trade. But the share of Ireland as a destination is broadly similar, both for goods and for services. As I said, Northern Ireland, it's a smaller economy, and Irish services with all of the multinational component tends to be much more diversified internationally. So Northern Ireland is a relatively smaller share of sales, both of goods and services coming from Ireland. That's particularly so if we look at all firms, including the multinationals. If we focus in using the Department of Enterprises survey on just Irish-owned firms, we see that Northern Ireland is a kind of much larger share, relatively speaking, of sales from Irish-owned firms. That makes up about 2.5 to 3% of total sales by Irish-owned services firms, and counts for pretty much about 10% of the total sales going to the United Kingdom market, which, if it's placed in the context of Northern Ireland being approximately 3% of UK GDP, shows that although this is a smaller share of total Irish services exports, it is still actually quite a strong performance in terms of overall exports of services by Irish-owned firms when you place it in the context of the overall size of the economies. In terms then of kind of what are we talking about when we say services trade, we can break this down into a couple of different types of services. And we see in terms of, on the Northern Ireland side, Northern Ireland to Ireland services sales. About 35% of those are in transportation and storage, and a further quarter are in professional, scientific, and technical activities. The other two columns there show the overall distribution of Northern Ireland external sales, so that includes Great Britain, and Northern Ireland exports, which is to other markets, but not including Great Britain. And we see that what is being sold from Northern Ireland into the Irish market is broadly in line with the overall structure of Northern Ireland's external sales. If we do the same for Irish sales from Ireland into Northern Ireland, we see that the biggest components of this are business services and computer consultancy, with other services also being kind of quite a substantial share. The data, because it's collected in different ways, I'm afraid has different breakdowns of the components of services, so they're not completely comparable in the two directions. What's interesting here is that the type of services that are being exported from Ireland to Northern Ireland are actually rather different if you look at the final column there, which is all of Irish exports, which is much more heavily concentrated in computer consultancy and computer programming and other IT services. And that's again reflecting the very strong multinational component and very much focused in IT of overall Irish exports. So the exports being directed to Northern Ireland differ a little bit from the overall structure. If we look across the type of firms then that are active in cross-border services, again, we compare goods and services here. We'll see in general, we break firms down by a couple of different size groups. Firms are more likely, as they get larger, to export, to sell to Ireland. But that's much more true if we look at the blue lines are pretty consistently much higher than the orange lines. So it's much as we said, much more likely for firms to be active as exporters and to sell across the border when they're in good sectors, and export participation for firms and services is quite a little bit lower. Also, if we look at the kind of the relative size of overall exporters of goods and firms that are exporting to Ireland, so the dark blue and the lighter blue lines, you can see for pretty much all size groups, those are more or less the same percentage. So almost all firms in Northern Ireland that are exporting goods are exporting some of those goods to Ireland. It's one of the kind of dominant markets, one of the first markets firms get involved in. There's a larger gap if you look at the kind of the orange bars when you compare the darker colored bar, which is the firms that are exporting somewhere, and the share of firms, the lighter colored bar, that are exporting cross-border. And you see there that in the case of services, there's more of a tendency for firms in Northern Ireland to sell into the British market and to not always have Ireland as one of their markets when they become exporters. Whereas for goods, if the firm is selling outside of Northern Ireland, they're almost always selling into the Irish market. If you're looking at export participation for firm size, taking the Irish survey data, we see a little bit of a different pattern where there's a lot of export participation even at lower ends of the smaller sizes of the employee distribution. I would kind of, again, put a little bit of a caveat on this though, because the Department of Business's survey is trying to target exporting firms. So it's not necessarily kind of quite as representative of firms that are not exporting at all as the Northern Ireland survey would be. But again, you can see that Northern Ireland is a smaller share. It's that the light orange line. So this is, even when you talk about firms that are active exporters, Northern Ireland is a little bit less likely to be one of their markets. And again, that's probably dominated by the smaller market size and the importance of the broader export diversification of the multinational sectors. One of the reasons, as I said in the introduction, that we might care about kind of cross-border services activities or international export activity in all contexts is that it is highly correlated with better performance at the firm level. And so we've done some econometric estimation of that, which gives comparisons between exporters and non-exporting firms across a range of firm characteristics. So summarizing these results here, it shows that an exporting firm in Northern Ireland is about 46% larger on average than a non-exporting firm. In Ireland, an exporter is about 70% larger than a non-exporter. There's large differences in turnover between exporting and non-exporting firms. In Northern Ireland, we find evidence that exporters also pay higher wages. We don't find so much evidence of that on the Irish side. And we also find evidence that firms that are active in cross-border and international trading activity are more productive as well. So that's looking at firms in both Northern Ireland and Ireland that are selling outside their local markets to any destination. We also broke this down into a little bit of a more granular analysis, whereby for Northern Ireland, we looked at differences in firm performance for firms that are exporting just to Ireland, which is in the first row there, firms that are exporting just to, or have external sales just to the Great Britain market, and then firms that are exporting to the rest of the world. And then likewise for Ireland, we break the exports down into Northern Ireland only, Great Britain only, and exporting more broadly to the rest of the world. And you can see across all of these that there's kind of strong correlations between being an exporter and being both larger, having higher turnover, paying higher wages, and being more productive. In general, exporting to the rest of the world brings stronger performance premia relative to exporting just to the neighboring market or just to Great Britain. So the firms that are selling really globally are bigger again than those just exporting across the border or those exporting into the British market. We can see fairly substantial benefits to the individual firms, even of being involved in cross-border sales activity. And as I said earlier, there's often a kind of a stepping stone whereby firms enter initially exporting by exporting to the neighboring market. So this is getting firms perhaps on the track to exporting more broadly. So those are the kind of those descriptive piece of information from the official sources were largely collected prior to COVID. A lot of these surveys take some time to process and to become available. In terms of kind of more immediate challenges, the Intertrade Ireland Business Monitor does much more kind of quick and qualitative analysis of firms. So they asked firms earlier this year on how they were dealing with the COVID impact, and asked firms were they fully operational, had they had to reduce service, or were they temporarily closed. And because of the structural impact of COVID being much more focused on leisure and hotels and on sectors where much more sort of face-to-face contact was involved, we see that firms that are active in cross-border trade were much more likely to be fully operational than firms that had no cross-border activity. Firms that are active in exporting were much more likely to continue being fully operational as well. So they were kind of less impacted by the closures and the impacts of COVID. The next challenge, of course, we can't really talk about cross-border trade without mentioning Brexit. Here, the picture, of course, is quite different than we focused on a lot over the last couple of years, because the Northern Ireland Protocol is designed to prevent checks on cross-border goods trade. Actually, services trade is not covered at all by the protocol. So services trade with Northern Ireland and Ireland are part of the overall agreements between the EU and the UK. Now, so far, there's been relatively limited changes to market access. There's a lot of recognition agreements put into place for most components of services trade between the EU and the UK. However, because the protocol doesn't cover services trade, there is particularly still some risk to these services trades if some of these kind of recognition arrangements aren't put on a more temporary basis. And there's still sort of ongoing discussions between the UK and the EU about these different components of services trade. The main exposure, and this is work done by the Department of the Economy in Northern Ireland, which I draw on here, rather than new research, the main exposures have generally been found to be in financial services, insurance, and also in transport services, which tend to be the most heavily regulated of services. So there is still some risk, although it hasn't emerged yet, of divergence or lack of recognition, changes to recognition in services trade, impacting on cross-border trade and services. However, there is some kind of mitigation to that, in the sense that two of the main ways in which cross-border trade and services is often restricted is in terms of short-term visas or limitations put on kind of professionals moving to deliver the services, or limitations being put on the recognition of qualifications. And in those two areas, the continuation of the common travel area means that the exposure of cross-border trade and overall Ireland, Great Britain services trade is less exposed to changes in these requirements, to changes in kind of services recognition agreements than overall EU-UK services, because the common travel area will kind of supersede any limitations to professional travel and qualification recognition that could impact on services trade in some other areas in the broader EU market. So just, I think, to rapid summary of all of that, obviously the data pulls together a lot of information on cross-border services trade and tries to fill a number of gaps by drawing on multiple sources of data, where the full picture is not available yet from any individual service. There are still some gaps. We'd like to have more data, and particularly data, when I looked at the subcomponents there, we saw that the way the services were broken down were different from the Northern Ireland side than from the Ireland side. So there's still a lot of room there, I think, for greater data collection and greater data comparability that would give us a fuller picture. But I think when we look at the characteristics and the returns to exporting, we see that there's a lot of benefits to firms in the economy in terms of overall export participation. There are some current challenges to those export services activities, but there's a big potential role for expanding this and for kind of bringing the level of integration that we have in services closer to that which we have seen in goods. And there's benefits there. You see the premium for the exporting firms themselves, and that suggests a lot of scope for improving and developing this further. Just very briefly to mention some of the policies, the Tánaiste mentioned some of these in his introductory, is that, policies that could support this expansion are obviously the coherence of regulatory frameworks post-Brexit to keep the kind of free flow of services, coordination of internationalization supports. Digital delivery, of course, is a great way to allow services to be delivered across longer distances, and a lot of that has built up quite considerably over the last year or so with COVID. And then finally, policies to support the attraction of FDI and across the island will also be of benefits to both cross-border trade and wider trade, which I guess segues very nicely into Iulia's presentation, which focuses specifically on the attraction of FDI, both in goods and in services, across the island.
Great, thanks so much, Martina. Well, as you said yourself, you set up Iulia's presentation quite brilliantly there. We'll have a new rule in ESRI webinars, whatever like that one speaker has to lead seamlessly on to the next speaker. So with that, it's my great pleasure to welcome Iulia Siedschlag, my colleague. And Iulia has produced a fascinating paper on foreign direct investment. So again, Iulia, I think you're going to share some slides.
Thanks, Alan, and good morning, everyone. And thank you for your interest in our research. Let me share my slides. Right. So this research is joint work with my colleague Vijay Yan and Professor Nigel Driffield of the University of Warwick. And we'd like to thank for useful discussions members of the steering committee of the research program, as well as people from government agencies and departments and colleagues from the academic community. We examine in this research paper factors and policy options that could enhance the attractiveness of both Ireland and Northern Ireland to foreign direct investment in high value sectors. The sectors we are focusing on are knowledge intensive sectors, and such sectors include pharmaceuticals, telecommunications, medical devices, software and information technologies. And let me start with motivating the focus of this research on such knowledge intensive sectors. So such sectors are increasingly important for innovation and productivity and for export-led economic growth, particularly in the context of intensified global competition. So therefore, we focus on these sectors in particular. And there is established international evidence showing that foreign direct investment is associated with benefits, both direct benefits in terms of the diffusion of new technologies and managerial know-how, but also in terms of creating jobs, as well as wider indirect benefits. And these come via spillovers on the performance of domestic firms, in particular on the innovation, productivity, and trade performance of domestic firms. And in recent years, there has been an emphasis on attracting foreign direct investment in knowledge-intensive sectors, especially because there is an interest in the wider benefits from such high-tech and R&D activities, in addition to job creation. And indeed, Ireland and Northern Ireland have policies focused on attracting FDI in such knowledge-intensive sectors. In terms of the research objectives, our research is structured around three broad research objectives. We first examined patterns of high value FDI in Ireland and Northern Ireland, and we compared these patterns with patterns in Great Britain and the rest of EU countries. And I would like to mention that we focus on new greenfield FDI projects. These are projects with physical presence, so we don't look at equity investments, and we also focus on new greenfield projects, and these are new operations by foreign companies at a new site. And the reason is that these are relevant when we look at the attractiveness of locations to foreign direct investment. The second part of our research is about the importance of factors that influence the location choices for high value FDI projects in Ireland, Northern Ireland, and across competing locations in EU 26 countries and the UK. So more specifically, we examine the sensitivity of the change in the number of projects attracted to Ireland, to Northern Ireland, and to the other competing locations, to changes in a range of location-specific factors. And these factors include demand factors, namely market potential, which combines market size and access to other markets, as well as market growth, another demand factor. And these factors are particularly important for market-seeing FDI. FDI focused on selling products and services to more markets. Then we examine supply factors, including labor costs, workforce skills, investment in research and development in the public sector. So these are factors which are in particular important for FDI seeking efficiency gains, but also sourcing knowledge, in particular from research institutes and universities. Another factor we consider is the geographical concentration of firms in knowledge-intensive sectors, and this is important in terms of positive externalities, in particular for knowledge spillovers, but also the availability of skills. Further, we examine a number of fiscal incentives related factors, including corporate taxation and government funding of business expenditures on research and development. Then we look at broadband access as a measure of infrastructure, and we also consider the importance of business regulations. We look at barriers to foreign direct investment and the complexity of regulations in the examined locations. The third part of the research, we examine a range of possible scenarios for enhancing the attractiveness of both jurisdictions to high value FDI. And we consider a number of policy levers, namely investment in research and development in the public sector, that is in the government funding research institutes and universities, workforce skills and broadband access. And secondly, we consider options for policy cooperation and coordination, and how these could enhance the attractiveness of both Ireland and Northern Ireland to FDI in high value sectors. A few words about data and methods. So for this research, we combined a range of data sets. First of all, data on FDI projects. We use data from the FDI markets database compiled by Financial Times. This is the largest database on greenfield FDI projects. And we analyze projects over 18 years from 2003 until 2020. We identify nearly 61 new greenfield FDI projects established in the EU and the UK, of which over 33,000 were in high value knowledge intensive sectors. And the sectors we consider are 13 sectors, including, as I said, pharmaceutical, medical devices, telecommunications, software, and IT services, financial services, business services, and space and defense. For the analysis of the importance of location-specific factors, we use data from a number of official statistics from the Eurostat, the OECD, and the European Commission for the analyzed period. And we examine the attractiveness of Ireland, Northern Ireland, and competing 96 locations in the EU and the UK. These are macro regions, and we look at them because when multinationals decide where to locate, they consider the set of available locations. And as I say, there are 96 locations. These are classified in the Eurostat as NUTS 1 regions. In terms of methods, we combine descriptive analysis and econometric modeling of location choices for FDI projects. The first set of main findings I would like to highlight are from our descriptive analysis, and I would like to highlight 4 main findings. First of all, we find that high value FDI in Ireland and Northern Ireland are relatively more important than in Great Britain and the rest of EU 26. When we look at the share of high value FDI projects in all new greenfield FDI projects, these shares are higher than in Great Britain and EU 26, and they are actually 70% or over 70%. I will come to this in a minute. A second finding I would like to highlight is that the vast majority of the high value FDI projects are in services, so high value services. Of course, we talk here about the number of projects, and we have not looked at values because data on capital investment is more limited. Another finding from the descriptive analysis is that over 2/3 of investments in Ireland and Northern Ireland are by investors from non-EU countries. And finally, when we look at the intensity of FDI projects, we measure this intensity as the number of high-value FDI projects per 1 million inhabitants over the full period. And in comparison with the other locations, so out of 98 locations in the EU and the UK, Ireland ranks the 4th, and Northern Ireland ranks the 17th, which is above the median location in the EU which means the location ranked the 49th. And the performance of Northern Ireland is above Scotland, Northeast England and Wales. So these are regions which are often used as comparator regions with Northern Ireland. So let me illustrate these findings with a few charts. So as I said, high value FDI appear to be quite important in Ireland and Northern Ireland relative to Great Britain and the rest of EU 26 countries. So 70% of all new greenfield projects in Northern Ireland and 76% of all new greenfield projects in Ireland are in high value sectors. And in terms of the new jobs created by such FDI, high value FDI projects have also high shares, 70% in Ireland and 76% in Northern Ireland. So this type of FDI are more job intensive compared to Great Britain and the rest of the EU 26. In terms of the sectoral composition, as I said, services dominate. 91% of high value FDI projects in Northern Ireland are in services, and in Ireland 86%. And then looking at the origin of investors, 64 of high value FDI projects in Ireland are by non-EU investors and 65% in Northern Ireland. A second set of main findings are in terms of policy options for enhancing the attractiveness to high value FDI across the island of Ireland. And as I said, we looked at a number of policy choices. So in terms of the gains, in terms of the enhanced attractiveness measured by the number of projects attracted to both Ireland and Northern Ireland, we find that higher investment in research and development in the public sector, namely in the government and higher education, would actually bring the highest gains in both jurisdictions. And in the case of Northern Ireland, an increased educational attainment of the working age population measured in terms of the share of the working age population with upper secondary and tertiary education would also bring substantial gains in terms of additional projects in high value sectors. In terms of cooperation and coordination of policies, opportunities, this would be with respect to market potential, workforce skills, and again, with respect to investment in research and development in the public sector. And such an approach is facilitated by Northern Ireland's continued access to the EU single market for goods, and also by the recognition of qualifications and the labor mobility enabled by the common travel area between Ireland and United Kingdom. So I think I I stop there, and perhaps we
Okay,
can
thanks so much, Iulia.
elaborate more during the discussion.
Very good. Okay, thanks for that. In a moment, I'm going to call on our discussants, actually, but just one other, or maybe two other thank yous before I do that. So we mentioned earlier on, and we've been talking about our appreciation for colleagues in the Shared Island unit, but the project is overseen by a steering committee, and in that context, I want to thank Anne Barrington, who chairs the steering committee, because again, it's sort of an important governance role for all the projects we undertake in the Institute. We have a set of steering committees over projects, but this obviously is a very important one. It was great to have somebody of Anne's experience acting as chair, so I was eager to make that thank you. And then from an ESRI perspective, my colleague Adele Bergen acts as the program sort of coordinator. So again, another important role, and I just want to express my appreciation to Adele for her work on this too. So we've now had the two presentations. I'm delighted to say we're going to move on to some more discussion. So we're very lucky to have Eoin Magennis and Richard Johnston, both from the Ulster University Economic Policy Centre. So I think, Eoin, we gave you the challenge of digesting Martina's report, and to do the review. Gave you a little shock there. I thought you might have to talk quickly about the other one, and then we'll come to you in a few moments, Richard. So can I just say to the audience, as questions start striking you, if you want to start entering them now into the Q&A function, once Eoin and Richard are through, we'll move on to the Q&A at that stage. So feel free to start submitting your questions. So with that, again, over to you, Eoin, and it's a great pleasure to welcome you to this webinar.
Thanks, Alan, and thanks for the invitation today. I think it's we've heard two very excellent presentations from Martina and Iulia there of the two reports. I would certainly urge people after the event to go download the reports. I'm going to speak on the cross-border services trade one that Martina has authored, and it's great to welcome it actually, and the research program more generally. ESRI has had a long line and a long tradition. They're going back at least to the early 90s. Of working in this space of north-south work, so it's good to see that continuing and indeed even accelerating in recent years. So I'm not going to cover the detail of Martina's report. We've heard quite a bit of that in the presentation. I think there's a lot of detail there too for people to kind of try and digest offline. Plenty there, I think, in terms of the areas that have been covered there. I'd draw particular attention, I think, to two parts to it: the firm participation and firm performance pieces, I think, within the report are well worth looking at, and something maybe Martina didn't have time to cover on, which is a fascinating piece, the final chapter on what we spend cross-border as households. I think that's a very important piece of the puzzle. If we think back to what services trade might have looked like 50 years ago, it was largely tourism and travel related only. Really, we had very little else apart from that. So I suppose thinking about that as an island, that still remains an important piece to it. But I just want to make a few more general points really in as a kind of response to it. The relative importance question, I think, is well drawn out in the report and is an important point. It is there for goods as well as services. The relative importance of the Irish market for Northern Irish firms, by stark contrast in the other direction, less importance, I guess. And I mean, it tells us a lot about the structures of the two economies, that and I think particularly about the kind of the role of FDI that Iulia has covered, but also I think the extent to which firms in south of the border have diversified their markets, so that the Northern Irish market, albeit it's much smaller in size, is of less importance. I think that's a key thing to it, and that probably brings us back to the point of which how cross-border trade can act as a jumping off point to enter other markets that Intertrade Ireland and others have made that point very well over the years. So that relative importance point is there. I think also the relative importance of services vis-a-vis goods. I mean, that remains obviously something that the goods trade is stronger and bigger than services. But Martina's made the point herself: the rare nature of exporting by services firms right across the world is an important point. And that probably leads me on to the second point I would make, is around about proximity. I think that is a very important point, and it allows us to think a bit about more. Tánaiste mentioned it earlier, that the scope for improvement or the scope for raising the level of cross-border trade one point I'd make, I suppose, to develop that a little, there's a good paper released just recently by Chris Van Egeret and Declan Kern in this space about the biopharma sector, and sort of looking at a mix of proximities there. That I suppose geographical proximity is one, but thinking of other things like organizational, institutional, cognitive proximities too, and how firms operate, both in terms of collaboration, but also I think in terms of developing supplier customer relationships too. So the proximity point is important, but I suppose there is a mix there to think about. The firm effects, I suppose, is the third point there. And taking on from the proximity one, I think the chart on the participation or rate of participation is a key chart, I think, in this report, and the kind of the clear alignment there that many firms in Northern Ireland, or many less firms in Northern Ireland, are doing cross-border trade as much as kind of exporting. So that's an interesting finding there. May suggest something about the kind of greater level of sort of born global services firms there. Certainly suggests the relative importance of the GB market to Northern Ireland exporters of services. So I think that there's a couple of things there, I think, in terms of that. But the Premia case is also very clearly made in this. That's something that Martina and her colleagues have been, working on really since 2015, 2016 with Intertrade. And I think, that point is very well made here again. The productivity Premia is interestingly much more clear to Southern firms than Northern ones, but that's, that's probably an argument or an issue for another day. The data point then probably is another one I think of it, and it's good to see that there are improvements there. I mean, we've moved, thankfully, I suppose, away from, if you were looking at Cormac O'Grada's work 25 years ago, he was able to kind of refer to almost commodity fetishism really there in terms of the trade data, that it was all about goods and little about services. We've moved there, and there's a pathway there, I think, to better data. The CSO development there around the annual services inquiry is certainly a big improvement. It was anybody working in this space before we're trying to work out, or provide estimates of what might have been, sort of sold in Northern Ireland as a part of the overall UK trade numbers for services there. And I think the work that Intertrade has done over the years in terms of bringing the two agencies, CSO and ESRI, together to look at sort of other in goods trade might provide another template to a sort of greater level of cooperation in that space around data. And then finally, just a final point or two around the policy implications. I think the coordination of supports is a critical point that is made there, and an important one. I think you have the continued within that. I think there's the work around the continued openness of public tenders across the island. I think that's a key market for services trade. There we've got some of the other kind of regulatory barriers that Martina mentioned to try and ensure that those don't kind of creep back up again. And then you've got trying to understand a little bit better about what, in terms of that coordination, what are the supplier relationships there and how do those operate in services. We've little enough knowledge of that, and I suppose a better granular understanding of what lies behind the composition there. Now that may not be work for data, that might be work for more qualitative work with firms, or actually, say, in transportation and storage, what does that actually mean for and what firms are involved, and what are they selling, and how does that operate? And then I suppose the other policy implication there is around, given where we are just today, there's obviously Storm Barra has an effect on that, but the fact that we've been doing Zoom and Teams and other sort of things for the last 18 months, points very clearly to the need for, high-end and top-level digital skills, I suspect, within for services firms, even more so really than for goods and manufacturing firms. So I think those are 2 points well made: the coordination supports in the first hand, and the digitalization on the others. I think seeing a progress in those will I think see some of that scope that you've identified there for a higher level of cross-border trade and services to come along. But finally, just thanks to Martina and the team there for this report. I think I'd commend it to everyone to take a much closer read at. So thank you.
It's very much own, and of course, it was great that we were able to draw on your former experience in Intertrade Ireland as well. And as you said, we've been having conversations like this for quite a while, so it's great to be carrying on that conversation. So now it's my great pleasure to welcome Richard Johnston. Richard is the Deputy Director at the Ulster University Economic Policy Centre. And again, I know you're going to talk about the FDI paper, Richard, and it's great to have you with us.
Yeah, thanks, Alan, and thanks, Iulia. So great paper and very interesting to frame the FDI competitiveness for both economies, just in the context of the Shared Island Fund, the protocol, and cross-border cooperation. So very timely piece of evidence. Obviously, the reiteration of evidence that the economy is much more focused on knowledge-based competition, which are the activities that drive innovation, competitiveness, and productivity and exports growth. All of which are areas that Northern Ireland certainly has struggled with for a number of decades. So across a number of economic strategies, etc. I particularly like the scenarios. These articulate the potential benefits or the potential impacts of the corporation tax rate change and the options that are available to offset that. So I'll come back to that in the comments about policy choices later on, but I thought that was a very useful framing of those types of issues. So there's two key points that I would add to the paper if data were available, which I suspect is the reason why they're not included at this point. So one for us especially is around political stability. And we saw that in the pivotal report released yesterday, which is more about how we retain graduates. So the South has benefited really from brain gain, where Northern Ireland has suffered as a result of brain drain over the last number of decades. But political stability is certainly a key driver, and we know this from working with firms in previous roles in Invest and from talking to companies more recently. In the early years of the Good Friday Agreement, we had a series of windfall investments. So, a number of factors affect those. So skills, costs, subsidies, access to the EU, time zone that spans the east coast of the US and the EU within one working day are all things that are helpful. Laterally, the return to direct rule, suspension of the executive and debates around corporation tax on, off, on over really a decade, and now where the Fiscal Commission has been set up, have all been things where companies have thought, well, we may or may not invest and we'll hang on till we see what that decision is or what the political framework is. So, and I think also in terms of the protocol at the minute, obviously being in the European Union's best, but the protocol is the best of what we've got at this point in time. But there certainly are frictions, and there are certainly concerns of how long it'll last and how long it'll last in its current form. Potentially, so those all weigh in FDI and even domestic investment decisions. In terms of the second point I would make is in around state aid. So I know you've focused on corporation tax and the government assistance for R&D. But again, I suppose Northern Ireland had quite a generous state aid regime in place, certainly for the earlier parts of the period of which is covered in the study. And it certainly would be one of the most generous in terms of Western Europe. And I think only really the Merseyside and the Highland and Islands would be the areas of the UK that had similar allowances. So these more generous subsidies were certainly part of the toolkit that was deployed by Invest and that would have been around selective financial assistance, skills support, and of course the R&D that you talk about as well. And second sort of main part of the response is in around interesting points for further research. So I thought your points about high-tech manufacturing, pharma and finance were particularly interesting. So, and it goes to some of the questions in the chat. There are things like pharma and finance that are particularly strong in the Republic, and neither are particularly strong in high-tech manufacturing. So is there something in the offering that's potentially missing from high-tech manufacturing? Is it to do with the hollowing out of, say, level 2 skills and the availability of those skills? Particularly, that'll be an issue after EU exit as well. Or is it that Eastern Europe and Asia, in your opinion, are just generally more competitive? And that's where that type of investment is moving globally. Second point that you've highlighted for further research, and I completely agree, is sub-regional. And that would be a great area to focus on if we can get access to the data. Sub-regional levelling up's a strong area of focus here in Northern Ireland. And if you look at the IDA targets for 50% of investment to be outside Dublin, it's obviously a strong focus of policy in the south as well. So how can more FDI be encouraged to areas of greater need? Greatest economic need would be certainly one of the points around the sub-regional levelling up that we'd be interested in. In terms of policy, I agree really strongly with the policy choices and the policy summary that you've made, and it aligns well to all the broader competitiveness research that I'd have been involved in. I was particularly taken with the government expenditure and R&D point, which ranks highest, and then educational attainment and educational participation. So skills are an area in Northern Ireland. So you guys will be familiar with the skills barometer that Mark McGill's produced for a number of years in EPC. There's a really good debate around skills in Northern Ireland. There's a skills element of the 10X strategy. There's skills subgroups, there's Belfast City region skills subgroups. So it's an area that's really, really well explored and well catered for, but much less so in terms of government expenditure and R&D. And that for me is really the key takeaway from the paper. I think perhaps it's seen as elitist, perhaps it's seen as something that happens in techie type firms or within universities. But I think, certainly for us, there's a good lesson on policy priorities and focus here, because that was one of the most interesting things that came out. In terms of networks, obviously the Dublin-Belfast Economic Corridor, in terms of manufacturing connectivity and exports, but also potentially a spur into ABC and Armagh, Banbridge and Craigavon, sorry for going into the acronyms, and up in towards mid-Ulster as well. So we have a very strong manufacturing base around there in Northern Ireland. So that sort of spur off the motorway up from RD up into the northwest certainly will be helpful for that. In terms of prioritising again, software and IT does really well in Northern Ireland. So in terms of shared access to the market, there's a real problem here at the minute with wage inflation and people and teams moving for significant pay rises, and that's affecting the competitiveness of that sector to a very, very large degree. Again, is it a case for regional migration policy? Is it a case for better access right across the island as well? And the last point I would make is in around government expenditure and R&D. So what potentially could we follow on with this research to look at to say, for example, find out where would that high value added research, where would that GERD focus best? Is it pharma, biotech and software? Or are there areas in which, say, for example, we should focus more on in Northern Ireland or more on in the south to complement each other's FDI policy? But thanks again for the invitation to make a response. It's a great paper, really adds to the debate. And thank you very much. So over to Alan.
Great, thanks so much, Richard, for that. Really, really do appreciate it. So we have a number of questions coming in, and we've been joined on the panel by Nigel Driffel from the University of Warwick. Nigel's co-author on the FDI paper. And I wonder, could I just sort of drop you right in it, Nigel? All right. And by that, I mean the following. We have two questions, which I see them as kind of related. So John Campbell has asked, the blunt question, which is what you'd expect from John, isn't the political reality that NI and Ireland are always going to be competitors for FDI rather than partners? Okay. And then Frank Barry of Trinity College has asked, well, I think it's a related question. And the question is, are there policies we need to follow to ensure that FDI inflows to Ireland and Northern Ireland are complements rather than substitutes? So I think you can get the sense of the two questions there, Nigel. And actually, in fairness to both, when I saw the topic of the paper initially, I was stuck in that mindset of competing industrial development authorities rather than thinking in terms of potentially collaborative. So it'll be interesting to get your perspective on it, please.
Okay, so I'm just checking I'm not muted, you can hear me.
We can hear you.
So if I take the first one first, I'm probably not best placed to comment on the sort of the political reality that was mentioned, but one of the things that we do know is the more, and I'll try and use a sort of a neutral term, the more that neighbouring territories compete on attracting FDI, the more that they collaborate, the more that they try and coordinate activities, the better they do overall. Now, that's not to say that you always want to compete or you always want to roll over and give your neighbour what they want. But overall, the more that territories can collaborate, the better in aggregate they do. after that, it's then about the individual territories. And we talk about this a little bit in the paper. It's then about the individual territories establishing what their value proposition is, because their value proposition may well be different. In terms of how I would go about doing it, what I would be asking is, where can we identify complementarities? Where can we identify that there are, if you think about it in terms of perhaps value chains rather than sectors, and you think, okay, so we've got a stream of activity here, and those streams of activity are in some sense related, then there may well be some elements of that stream that are best attracted to the Republic. There may well be some elements of that stream that are best attracted to the North. So the question then is, how do we identify what the blockages are? Is it skills? Is it R&D? And how do we then coordinate those across? That's kind of how I would be doing this. And I think that leads on to, I think you said it was Frank's question about the sort of policies to ensure that complementarity. It's really hard in this space to not kind of say skills, 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 and skills, because they are always at the center of this. International businesses, wherever they are based, wherever they are thinking about their markets, one of the things that they know is that they are in a war for talent. They are in a war with each other for attracting the right sort of people. So the more that localities can understand what their value proposition is in terms of the availability of that talent that the firms want, then the better overall that they'll do. And the more that those things, because we're talking here about, in global terms, relatively small markets and relatively small labour markets. So the more that you can do to collaborate on that, I think the better overall you'll do. Will that do for as a starter for 10?
Sorry, yeah, that will do for a start of 10. And it's an interesting contribution. I don't know, Iulia, did you want to contribute at all in that discussion? Again, about how the complementarities can be put in place in practice.
Yes, I just want to come back to skills. So we know that skills are in high demand globally. So I think this is an area where cooperation and coordination of policies would make sense, because developing skills it takes time, and as I say, I think a coordinated approach would maximize benefits in both jurisdictions, rather than competing for skills which are in limited supply.
Okay, can I actually, there's a related question then has come up on the chat function from Futurecast Leitrim is who the question seems to be from. But the question here is whether or not SkillNet Ireland should be an all-island body, which I guess would be a sort of a very focused way of addressing that. Oh, and I don't mean to put you on the spot or anything like that, but given your experience in Intertrade and you're sort of thinking about that sort of question about an all-island approach to skills, does it make sense?
Yeah, well, in terms of the work that SkillNets do, Alan, if we think about what that for those who might not know what that is, that tends to be where networks of companies come together and formulate a sort of a skills response to a particular need there within their sector or their kind of business area, and there's always been, I think, scope for expanding that approach across the border, in a more coordinated fashion. I think that's been an area that I would have felt was kind of open to a greater spread of it. SkillNets is a good success story, south of the border, and I would see that certainly that approach, even if it was something run by SkillNets and others, I think it would be a good way of doing that. I think more generally on the skills point and in terms of the greater levels of coordination, we it's trying to kind of understand these are kind of specific niche skills in many ways. I think if any of us on the panel here speak to businesses, it's often at a very niche level that businesses are looking skills, or that there are shortages which exist. So it's, some of these responses can be quite quickly turned around, I think, if they were done in a more coordinated fashion. And then there's the broader point there that levels of labour mobility across the border are not as high, I think, as we tend. There's certainly people who are commuting distances across the border. I'm not saying that there isn't, but even we've kind of seen it even in some of the and you do see it in Donegal and in Louth, where people commute across the border from the neighbouring counties there. But in terms of that kind of mobility and moving, and in and around the whole issues around sort of pensions and tax and so on and so forth, it's not as easy as it could be. So I think that would certainly be an issue of actually skills mobility. I think there's more to be done there.
Yeah, actually, well, from a sort of a prior research interest, the issue of mobility is something that I've always been very interested in. But it strikes me now that every time we have a conference at the ESRI, housing manages to come on the agenda in some shape or form. And it certainly seems that housing, certainly in the Republic, is such a constraint. Mobility is just so difficult. Especially, and my understanding from my last visit to Northern Ireland is the housing market in Northern Ireland is fairly hot at the moment as well. And so while a good deal more affordable than the Republic, it's still a sort of a challenge in terms of that. We're going to stay a little bit with the sort of mobility, and actually this is a question for you, Richard. So we're getting our panelists to work overtime today, in a sense. But Hugo McNeil has put a question directly to you, so I'll pass it on. So you mentioned the recent brain drain from Northern Ireland, and that it's happening because of political instability. How significant do you hear this being for from Northern Ireland business? So again, that ongoing issue of instability, and what are you hearing then in terms of what business are coming back to you with?
Thank you. Yeah, it's a very, very key issue for business here at the minute. So if you look at EU exit, really what happened in 2016 when the vote took place was that the inflow from across Europe really stopped at that point. And those sort of EU workers who were less embedded in Northern Ireland, many of them moved back home. Now, there's a number of reasons for that. It's not just the EU exit vote. Wages were growing quite rapidly in Eastern Europe, and other things were happening as well. So, and some, of course, stayed. If you look more recently with COVID, it's just stopped the movement of labour. So firms have had a real challenge in terms of getting in sort of skills that they need. We have about 25,000 young people entering the labour market each year. So some of them obviously continue into further education, and some into unemployment or inactivity. But if we talk to firms, really, whether it's forklift drivers, heavy goods vehicle drivers, whether it's digital skills, there's a massive challenge in terms of getting the appropriate skills into work at this point in time in Northern Ireland. So whether there's I suppose a bit of a change in attitudes with COVID as well, which might be driving it in terms of what jobs people are willing to take. Food production, I agree as well, and a lot of parts of manufacturing certainly find it quite difficult to find people to work in those environments. Part of it's possibly the perspective of, in inverted commas, oily, greasy manufacturing plants, or quite hard work and difficult, dangerous work within some of the other manufacturing or construction industries. But yeah, there's quite a bit of wage inflation right across sectors in Northern Ireland for a level of skills right across different occupations.
Okay, thanks for that. Question directly for you, Martina, which I'm going to have to read out, but there's two components of it. This is from Kieran Higgins. So to you, Martina, so you made reference at the start about data and data gaps. So do you think that cross-border trade and services may be underreported or not adequately captured? Okay, so that's strand one of the question. And then strand two is the following, and it's picking up Eoin mentioned public sector contracts. And Kieran is wondering if you're including contracts tenders in the report. And here's the example he gives. If a northern company wins a contract to lay some water pipes for a southern council, how does that appear? So quite detailed. Well, the first question is broad, the second one's a bit more detailed. Do you want to have a stab at them?
Yeah, thanks. I actually agree with Kieran that I think there probably is some underreporting of cross-border services flows. We know from a lot of the survey evidence from Northern Ireland side, where it's a bit more detailed, and looking at goods as well as services, that cross-border trade tends to be a large number of firms, a large number of activities doing relatively small individual transactions. And I think that's equally true of services, which means it maybe isn't so easy to kind of capture the totality of lots and lots of small transactions. I also in the report have a chapter that I didn't get time to really talk about here, which is that, you know, most of the data I use is asking firms how much they exported or imported. But if you look at cross-border shopping or people traveling across the border to avail of services, you don't necessarily pick that up in that type of data. You know, a firm in the hotel, you know, hotel that is exporting a tourism service doesn't necessarily know in a lot of detail if the hotel room is being occupied by somebody from outside or inside the country. So I think in a lot of cases, some services are quite underreported because, you know, almost there's not, if the customer is traveling to avail of the service, it's not so obvious. And there's some different data on that in terms of the tourism surveys, but that doesn't break down the expenditure by goods and services very well. So it gives us a kind of an overall view of kind of cross-border shopping, but not any breakdown into what exactly. So there's a real data gap there in terms of the smaller, kind of more frequent cross-border activities. On the public sector contracts, if a Northern Ireland company has a contract to lay water pipes, that should be there in the export data, but there are issues in terms of if they subcontract anything to a local supplier, it may not be included. But in general, the public sector tenders should be there in the export data, and keeping obviously public sector contracts. That's a big element for lots of smaller companies and a great way to get into kind of cross-border activities. So it's a useful kind of like introduction, keeping those tenders open at an all-island basis. Probably one of the, as Eoin said, one of the policy elements in terms of keeping the all-island economy sort of integrated, and just a way of also promoting the awareness perhaps for companies of the different opportunities involved on an all-island basis.
Very good. While you're talking there, Martina, I'll just put another question to you. So this is from Alan Bridle, from Bank of Ireland in Northern Ireland. So there's kind of Alan makes a point and then there's a question. So I don't know if you can read this or not, but let me read out for our audience anyway. So firstly, thanking everybody for the 2 pieces of research. And then here's Alan's one. Historically, Northern Ireland's relatively low tradable services space also reflects the branch nature of a regional economy where many of the higher value add activities are located or HQ'd elsewhere, and Northern Ireland exports talents to London, Dublin, Edinburgh, rather than services, which I think is an interesting actual observation. And the question that follows to the panel generally, but you can take it in the first instance, it's back to this issue. Does the panel agree that talent retention and development in Northern Ireland is absolutely a key? And does the pandemic shift towards more remote working potentially change the dynamic a little? So I don't know, Martina, do you want to take that just in the first instance, maybe, about that sort of regional nature, and Alan's point then about you know, it being a branch economy rather than the HQ economy?
I think that's a really good point, and it may be one of the reasons why we found this difference between the share of firms that were exporting goods to Ireland relative to the share of services firms. The services firms seem to be more likely to look to Great Britain as the first instance if they're just exporting to selling outside Northern Ireland to one particular destination. And it may well be that they're more embedded in larger kind of branch activities when it comes to services. And that's just not a structure that's perhaps as common in some goods. I think both in the kind of services exports in terms of the kind of premia attached to being involved in cross-border services and exporting of services, and also all of Iulia's work in terms of the attractiveness of FDI. This issue of the importance of skills as really the kind of like the fundamental building block of greater economic growth has come up several times, and there's a lot of work done on, I guess, and Richard and Eoin have already mentioned it, on knowledge retention and skill retention in Northern Ireland. And I think that's something that would feed in a policy direction, both to the growth of kind of local Northern Ireland firms, which is possibly more what I've been picking up in the services piece, but also in terms of Iulia's piece on the attractiveness of for FDI.
Nigel, do you want to or have a comment on that? Again, I'm just sort of conscious of your sort of from perspective within the United Kingdom, that presumably there's other regions of the UK that share that characteristic that Northern Ireland would have, as I said, just to use Alan Bridle's sort of terminology, branch oriented rather than HQ oriented, and that then it's a sort of a fundamental constraint almost, really, isn't it, on development possibilities? So presumably it's a familiar point. Is there a solution?
It is. Sorry, no, it is, and I think in some ways, I mean, speaking as an outsider, Northern Ireland almost suffers from a sort of double whammy here. That it's a relatively small economy, to an extent isolated by geography from the rest of the UK. By definition, there's a sea route or whatever. But at the same time, it also suffers in the way that Merseyside and the Northeast and whatever do, as your questioner said, that it's essentially then attracts, in UK terms, it attracts sort of regional branches, or it's not somewhere where UK firms are going to think to locate head offices. I think one of the things that might be interesting in a Northern Ireland sense is how well Northern Ireland does on fintech. That it does look like Belfast is establishing a little bit of a lead on much of the rest of the UK around fintech. So it'll be interesting to see whether sectors like that will help overcome that, because traditionally, particularly in sort of finance, non-head office stuff has been seen as like fairly mundane. You just check in loan applications and all the money gets made in London or whatever. Well, actually, if you're doing fintech type stuff, there's an opportunity potentially to kind of break that down a little bit, but also B, the sorts of people who are being employed to do that are going to be more skilled, more high wage people. So it might be that fintech might be a little bit of a disruptor there, but whether there are other opportunities in Northern Ireland, you'd probably need people who are more expert on the Northern Ireland economy than me.
Okay, and actually just on that, Richard, if I can ask you, what's the secret behind the fintech success, and was it policy driven or sort of a market creation? Or do you have a sense?
That's an interesting one. I think there's a lot of factors. Again, you have possibly a couple of key individuals who had moved from here, worked in the US and worked in London, but always wanted to come back. So, and then you've also got people like Dara McCarthy, who's a Cork national, but wanted to set up in Belfast. So again, I think there's some family links to Belfast. So there's always a story as to why people set up in Belfast, but I think some examples there that have been very, very high quality and fortunate linkages that were set up. So that whole point about diaspora and having a link to a region and having a rationale for coming back have been very important. Again, heavy investment, from the early 2000s, Invest in I, Catalyst, Department for the Economy, and a lot of investment in those types of skills within universities as well. So part of it's about supply, part of it diaspora, part of it really sort of broader factors, and I suppose cost. But yeah, it's something I haven't studied directly, but there's a number of reasons in there.
Yeah, no, it's just interesting. It would be a sort of fascinating case study or whatever like that, just to see, because it does seem, as Nigel was pointing out, it does seem to be a success story, and interesting to see if possible to build on them. Okay, we're kind of coming towards a close, but there's a question from Louis Brennan. It's quite a detailed question. So, Iulia, I think this is one for you. So, in terms of the origin of high-value FDI into the island of Ireland, you highlight that some 65% originates from outside the EU. Do you have a breakdown for such investment from outside the EU in terms of its country region of origin. So does that question make sense, Iulia?
Yes, so actually the answer is yes, and by far the biggest investor from non-EU countries, I mean, they come from the US, and the US is the biggest investor, not only in Ireland and Northern Ireland in these high value sectors, but also in almost all the other European countries. And we have data also on the regions from where investors come, for example, within the US, but we haven't exploited yet that more detailed data.
Okay, thanks for that. Well, I said we're kind of coming towards an end now to proceedings. So I suppose I'm just going to ask one. I'm going to say a small question, but it's probably a bigger question. But I mean, one to Martina and one to Iulia. Firstly, Iulia, do you think there will be increased collaboration on FDI, say, over the next 5 years?
I would hope so.
Okay, that's a good answer. And Martina, then, in terms of, we've sort of talked about the possibilities of enhanced cross-border trade and services, but again, do you think it will actually happen?
Sorry, Alan, you just froze on me there. So could you?
Oh, sorry, I'll ask the question again.
Sorry.
Yeah, similar question as to Iulia. Just the question: while you've talked about the opportunities for enhanced cross-border trade and services, do you think it will actually happen?
I think it will. I think the big increase we've seen in services trade because of Northern Ireland's location within access to the EU single market, a lot of modern services are attached to goods trade, and there's a real sort of synchronicity between the two often. So I would say, although the protocol and single market doesn't apply to services, I could see a kind of recognition of the opportunities and kind of focus towards the EU being reflected almost as much in services trade as it would be in goods trade.
Sure, very good. Well, listen, thanks for that. Okay, I said better draw things to a close. We've had a long and productive morning. So again, let me thank Martina and Iulia for obviously for the presentations, but probably more fundamentally for the great reports. And thanks, Nigel, for your contribution on the report and also for coming in for the questions. And we must have you back at some stage. We'll drag some more value added out of you in terms of these discussions. So Eoin and Richard, again, sincere thanks for coming along. And again, I know there is a bit of work involved in terms of reading through the paper and thinking. We don't take it for granted. We really appreciate the effort that you put in. So again, thanks for that, and I'm sure we'll talk again. And then just finally, thanks again to the colleagues in the Shared Island Unit, Department of the Taoiseach, for the collaboration. And thanks for everybody for logging on today. It's been a good morning, I'd like to think. And as I said, I think these are the sort of conversations we'll be having again from time to time. So with that, again, I wish everybody well. And again, in a Storm Barrett context, everybody should try and stay safe. So bye.